trying to post videos more frequently. My name is Kevin Alpha. I am a Forex trader and I have been trading for a little over 3 years. I'm doing this video particularly to just kind of put out value out there into the world. When I was starting out, I self-taught and it was a real struggle because there weren't really place back then to find quality, you know, in-depth material absolutely free. So let's get down into it. The video might be a little bit lengthy because it's the first video. I'm gonna have to like squeeze through a little bit of concepts here and there. And my strategy is S.M.C, smart money concept specific kind of S.M.C that's just tailor fit to me. Same, the rule stays the same. And you just kind of make up your own along the way as you go. Be dedicated, stick to your rules, and keep fear out of it. Ladies and gentlemen, the very first thing I'm going to talk about is market structure. Market structure is simply the flow of the market in the direction. People call it a trend. But even in that trend, you've got to understand the structure of the market that helps you identify the trend, right? For an uptrend, you want to see the market going up physically, it's like the most basic way I can say it. For a downtrend, you want to see it physically going down, but then you see those little things we call pullbacks, and you wonder, oh, it's changed direction, it's going to go in. No, that's where the structure come in. Understanding the structure helps you understand fully the market. Let's get down to it then. All right. Now, the very first thing you want to see is the uptrend. Let's go down. This is a POI. A POI is a point of interest. It may be order block, order flow, or fair value gaps. I will talk about those in subsequent videos. For now, let me focus on this and show you the flow of the market, the impulse, the correction, another impulse. This correction, as most people would call it, is a pullback to S.M.C. You have the flow, the pullback, and then the flow. I'm going to explain what a full pullback is, what makes it valid, and how you find and identify it. And when it takes the previous pullback, that becomes an inducement. An inducement is when it grabs the previous pullback, like I said, and after a successful candle close below the inducement, because in some cases the candle don't close below the inducement, but I'll explain that in other videos. It finds a point of interest, the POI, to tap on and then go forth to break structure. How does it break structure? The moment the inducement is grabbed by the market, that's the previous pullback, the high becomes confirmed in an uptrend. If it's a downtrend, it's a reverse, the low becomes confirmed. And when it comes back to successfully candle close above that high, it becomes a break of structure. And the previous low, like the place it went the lowest, before it went forth to break structure, becomes the change of character. It's pretty much the same. It's going to do like this, flow, create another pullback, take that pullback, mitigate some other block, a tapping of another block, another flow or fair value gap is called a mitigation, and then push forward to create, more breaker structures if the uptrend continues. Now for a downtrend, it's pretty much the same thing. So the POI must take the inducement. The most important thing about S.M.C is the liquidity, which is the inducement. That's the most important thing about S.M.C. Now the change of character keeps moving. Every time it creates the structure, take the inducement, tap in the POI, the new low it went to before breaking new high. It's change of character. And we dive into something a little bit more complex. Let me take this off just for a second. I mentioned earlier the concept of a pullback, and I am going to try to explain what a pullback is using this candlesticks over here. Now, for perhaps people that are too new to Forex and you're seeing my video, the very first one, this is a green candle. It's a green candle because it opened here and closed here. Closing above where it opens instantly makes it a green candle, a positive candle, whatever it is you want to call it. Now, a red candle, on the other hand, it closed below where it opened. So it opened here and closed here, and that's simply it. That's what makes it green and red. But I am using that in terms to show you that this is an uptrend. That's why there are more green candles, right? Now, explaining what a pullback is. This is an independent candle. It's an independent candle because it took the liquidity of this other candle completely. Like it's flowing, they're all going up, right? A pullback is when, on an uptrend, the low of the previous candle is taken by the next candle. Now, this is the previous candle. This is the next candle. It sent a wick. It could be the wick. It could be a body. Took the liquidity from this particular candle and then went on to print like this, right? So the uptrend continues, but then that's a pullback, like I showed you in the earlier structure. This is a pullback. Let me use the path tool now so you can see it. There, the pullback, and goes forth to print a new high. So that's literally the pullback. But if the market were to come back down like this, after the pullback, printing other candles, and take this particular last pullback, that becomes the inducement. See, it begins to make sense from the first diagram I showed you. Takes this particular last pullback, becomes the inducement, and then taps into a POI someplace around here, which I'll explain later on, and then goes on to break structure, because the moment it takes this inducement, this place becomes confirmed as the new high, and when it comes back to close above that high, becomes a break of structure. Now we move over to the same thing with the downtrend. We'll say very same thing with the downtrend. Printing candles, closing, and then the wick and the body. It could be the wick, it could be the body, but I'm showing you right here the wick and the body took the liquidity of the previous candle, because it's a downtrend. It took the high of the previous candle and then it concluded to close below. So the liquidity flow for this one would be something like this. Then to that pullback. That's the direction of the liquidity. And if it were in any instance to come all the way back here and take this previous pullback and tap into a POI, the moment it takes that previous pullback, this would become a confirmed low. In the case of a downtrend, this would be the inducement. Tap into the POI, this would be a breaker structure. This will automatically become the new change of character. Now, I said I was going to show you how to identify a pullback. Now, let me show you what is not a pullback and show you why this is not considered a pullback. Because this, as you see, the green candle printed right here, large green candle. Now, the high of this particular candle and the low of this particular candle has not been breached. Remember, I showed you independent candles, candle that flowed above this one or below this one. Now, these three candles in particular, 1, 2, and 3, they all formed within the body and wick of this other candle, none of them exceeding it outside from the top or from below, therefore making them structurally irrelevant in S.M.C. They did take time to form, of course, depending on the time frame you're on. They took time, the full amount of time to form, but they're structurally irrelevant to S.M.C traders, which means this is not a pullback. It's not a pullback. If you were to draw the flow of liquidity, it would simply be a straight going all the way up, right? Now, it could have been a pullback if this particular wick had gone above the green candle, right? That would have been a valid pullback all the way to the top. Or if this particular wick had gone below this green candle, it would have been a valid pullback. Now, that's the important thing about pullbacks. Now, I'd like you to, of course, I'll dive into the live market to try to show you some of that as well, but that's later on. I'd also like you to practice, because if I show you and you don't practice, then it's not really gonna work out. Now, the last and most important thing you want to know for a beginner is multi-time frame analysis. Now, this is going to be a little bit more technical, and you're not going to get it all at once the first time. I promise you, I didn't get it all at once the first time either, but I think it's the consistency that really matters. A friend once told me, the market will teach you everything you need to know. You just need to survive long enough in the market to learn these things. And that's where risk management comes in, trading psychology, whatever else. But for now, let me show you what multi-time frame analysis means.